All right, test 1 2. You know, I had an idea. I was like, why am I always trying to think about why I gotta come at an angle and come in a way to where I have to create some content, um, to create some type of valuable knowledge for myself. And then I thought, you know what I'm saying? I could at least make a video for myself to use for notes or strategy development, which is what I'm about to do, but anything. So I'm gonna expand on that. That's where we're about to start. About to get into some strategy development. We're about to really expand on this setup right here. Oh, I forgot I went back in time. Let's actually remove that. I'm gonna remove this fib and we're gonna be looking right here. Okay, we're gonna be looking at a 3-wave analysis, and essentially from the beginning of this, this identified move right here, this bullish impulse, pretty much if I were to duplicate this arrow, right, it came over here and did that exact same move. So how I anticipated and caught that move was really just by measuring that first move. So if we were to go to a blank chart, and I already explained everything, so actually what I'm about to do is I'm gonna copy everything right here. I'm gonna copy it, boom. I'm gonna go to a brand new blank chart. Let's go to Coinbase. Coinbase should be blank. If it's not, okay, oh well. Boom. So the thing is, when you plant different things, your measurements are going to be different. That's all right. I'll just do it from scratch. So what I saw, right, and I'm on a 2-hour time frame for kind of a reason. So let's not really pay attention to the time frame. What I'm really just starting at is I saw this move right here. This first move was the first time that the price crossed above the aqua since this last bullish impulse. So in a sense, it was the first retrace, which created that second retrace, which created that final third explosion over. So I like to walk myself through the market and identify those points in the market. So as I'm walking myself through the market, this is where Fibonacci comes in along. I don't like to guesstimate, right? We are always precise and intentional with what our movements are in life, right? And the same things applies to the charts. No guessing. So after I've identified that fib, I don't even want to confuse people and may not see what I want to see. I want everybody to be intentional. Everybody to be looking at this exact same thing. What we are looking at right now is this first point in time where price made this bullish impulse. I'm trying to set myself up, excuse me. There we go. All right. So when price made this bullish impulse, this is just one of the steps we need to identify. So a lot of the times we can get ourselves confused in what happens next. It doesn't matter what happens next. All I need for it to do is come into one of my zones. So actually let me back up and draw those zones. So everybody can be on the same page. I'm gonna actually change this fib to be something specific to where it's just right there. And actually, let's just take off some of these things off the screen. We'll leave one on. Actually, I can just do this, can I? Boom. So this is what we have. And after that, all I'm going to do is draw boxes. Right here between this 382 to 618, I'm going to draw a blue box. And between the 786 to 886, I'm going to draw a purple box. And what I want to happen is price to hit 2 Fibonacci levels and rebound. And what I mean by that is if it's at this top area here, all I need it to do is come to simple one place. If all it wants to come to is a 236, that's okay. 382, that's okay. 50% doesn't matter. But once it hits a level, what do we want to see? Essentially this, we want to see it replicate. Now it's not always perfect. Sometimes you have many moves inside of a move, which is what price is always moving like. You have to visually count yourself through the steps. So the reason I'm marking these boxes and marking these zones is that's myself counting my way through the steps. So when price makes its, come on now, there we go. When price comes back down, okay, and makes these retraces into the zone, I'm looking not only when it comes into these boxes, but when it's hitting these specific price levels, because those are the ways that I can identify my stop losses, my entries, etc., etc. So when it hit these levels, nothing extra I'm doing. I'm not doing anything extra but counting the levels. So the only thing that I'm counting right now is the break of how are we going? We'll just do it like this. The break of this level right here, and then the break of this level right here. It passed down the 3 to the 50%. So let's put all 3 on there. Okay, I'll reset my chart. And now all I want to do, right, is wait for price to come back down. And I need to be more specific on what I'm waiting for, right? So it hit, like I said, it came back to my zone and bounced up. And as you can see, this little move wasn't strong enough, right? This little one engulfing candle did nothing in terms of what we needed it to do. So what did it do? It rolled back over. So now when it's coming back, I essentially want to see it catch itself in price. You know what I'm saying? Make some type of bullish intention again. And every time it breaks a level, remember we're counting it. So now this is 2 levels that it broke. Remember it broke it here, then it broke here. Okay. So when it breaks these levels, we're counting them. So we're not 1, but 2, but also 3 here. So we're 3 levels down. Once we begin to get more than 3, I can say, we can then begin to look for entries because we want to balance ourselves out in the market. So if I'm going to come away and take our balance away, let's say market is moving like this in the uptrend, right? When market moves like this in uptrends and downtrends, we have to be able to institute buys, and right? Or let me just say like this: when you want to take a trade, right, you don't want to be greedy and think you finna take the whole trade. Let me start over. Think you finna catch the whole maximum, you know what I'm saying, gigantic profits of the trade. Sorry, you know what I'm saying? You're not finna get all that. Even if you are, it's not about what you can. It's about being more of your own style. I'm not even gonna get into that. So how I like to do it, to be specific, right? We count it into steps. And if I were to draw a Fibonacci from this low to this high, just measuring this move, you can at least say, all right, give me 50. That's pretty crazy how that fib just came specific. You know what? Anyways, you want to say you want to get in at least 50%, right? Give myself 50% on the table. That ain't greedy. That's at least halfway. Meet me halfway, cuz. Bet. And when we go for our targets, all this is from the 50% traced back up to the high. So it moved back up. It's 100% retracement at this point. And then what is this? 1-3. So negative 13, 10%. That's what we're looking for. 10 to 30%. 10 to 30% out. Okay. So we're going to use that example into finding what it's going to do over here. So now we're 30%, 50%, 60% down. We're almost 70% down. We've reached 70%. We are 1, 2, 3, 4 levels down, not even included in 2, 3, 6. Excuse me. So now I want to see bullish impulses out of that. Okay, you see this and this rally right here. This, my good friends, is what you want to see. But it must hold. If it comes back and engulf all the way down like that, doesn't clarify. And even if you were to use that as an entry, your stop loss would always be 3 levels down from when you enter. So that's a good level to say as well. Let's say price came down here and I say we're looking for 2 levels to identify, right? We want to grab at least 50%. We're going to use these previous levels that price has reached. And once it comes back again, we're going to now change those black circles to, let's make them yellow circles because they're verified. They're setting up, right? So that's the first level that's set up off of. Here's your second level that's set up off of. Okay. And the next one's going to be blue. So let's say that's your next buying opportunity. If you're using the 786, actually, excuse me, I did that wrong. If you're using the 786 and the 618 as your verified zones, then these two will be your entry opportunities. And like I said, if you're coming from here and you're going to enter, you want to at least use 2 to 3 Fibonacci levels down for your stop loss. So at the minimum, you could be deeper than this, but at the minimum, I would say 2 levels down at the 786, just not only below your previous low, but in a noticeable gap range that's going to give you a decent risk to reward target range. If you were to take it to the next fib level from where you currently are, right, the good entry, you'll be in profit right here. Right, unfortunately, profit would have came back down. You would have hopefully been able to see a stop loss and profit entry. But let's just keep going, right? No need to explain this little move that didn't even really happen, right? Essentially, what did price do? It literally replicated itself. So what I'm gonna do, I'm gonna take that, I'm gonna duplicate that over here. Same thing. It's cool when you learn how to use TradingView. Comes and does what? The same thing. So now, when this first trade opportunity, actually, let's keep these on the trade. Let's keep these on the screen so you can see how they're successfully working, how they aren't. So now there's another zone that I'm going to draw from the 236 to the 382. I'm going to draw like so. And this one, I'm going to actually mark yellow because this is our yellow zone. You know what I'm saying? So once we get into another trade opportunity here, because this one didn't make it, this will at least be our first target. But our real target is going to be up here at this green zone that I'm not about to draw. Between, remember I said 10 to 30%, that's what we want. That's all we want. 10 to 30%. So the 10 to 30% is going to be that top green box that I just drew. And this bottom green box is going to be the 0 to the 130. So I kind of gapped it, and I'll explain why later. So let's say we take this first trade opportunity. You see it wicked in there, so it hit our target. But that's just really the mini price range of the institute or move between levels. So that's just pretty much me saying, as price moves between the level of a Fibonacci level, you want to take partials, give yourself profit, because the market is going to move in ways, as you see, and it's going to move these wicks where you're going to be in profit, not going to be in profit, going to be in profit, not going to be in profit. So those times where you are in profit, take money off the table, take money off the table, give it back. We're always accumulating. That's the main goal, not to see how much we can stack at one time. Doesn't mean anything if if it's in your equity and it doesn't come in your balance. What that trade history look like? You see how price was in profit here. Okay, replicated this move and even into a longer session, right? Came just above the target zone of 236 because now price's level went not only 1, 2, 3, but 4 levels, considering the 7 and 886. I would consider this 886. I didn't count it, but I would. So price is gonna range. It's gonna stay in the same range that it's doing. So yeah, as it stays in that same range and now it loads back up, what do you think it's about to do now? We never know what it's got to do, so don't try and guess. What do we do though? We watch. We wait for the same reaction as price is coming back down, like even went deeper. Now there's other zones that you could draw, but for the sake of time, I'm not even going to draw the zone. I'm just going to draw this line. Let's see if it hits that line. Let's make it aqua. As price continues to move. Okay. We see some action that's happening. That might be exactly what we need. It's all about patience. First level. Listen up right here. My apologies. Actually, let me pause this, yeah, because something just... 1 second. Yo. All right, I'm back. So, we're getting some feedback delay. Whoa, let me hold on. All right, yo, let's run it. So, we've had this first bullish impulsive move. So, now essentially, we want to see the continuation, right? Just like it came in here, back above that blue zone and into the yellow, we want to see that same thing replicated again. So let's see how far we get. Okay, So it rejected off of it and then held right back into it again. So I'm just gonna take that. What I'm gonna do, I'm gonna duplicate it over to that. It'll let me. There you go. Duplicate. Boom. Essentially, and you see it went to the top side as well. So let's see if it makes it with it 382. No, doesn't. Comes back down. So the question is there selling opportunity in here in the same buying opportunity? Yes, there is. And before I can get into that, what I really want to do is, now that we walked into this part, now I want to come back here and actually throw the EMAs on it and tell you guys exactly what we're really looking for. Okay, so right, if we start with having this first measured bullish impulse, all right, this nice move up here, and now we have the bearish retracement. Notice this aqua line right here. This aqua line is the main ingredient mixed with this gray line right here above that red. I'll explain why in as we go. So as we look at where we are right now, just at the top of this blue zone, right, what's going to happen? We see and know that price is going to come down past the 50%, past 618. If I am the more technical person like you, on 48,270, I have to call out the price ranges. Let's just say 48,270, 48,705, right? We want to see it coming at 48,705, and at the top of that purple, right at the 786. We can see price has a nice, let's see, I actually let prices just go and I'll kind of talk our way through. We can see price has a nice reaction back down. If you see, it's at this red zone right here, it's holding down. We want to see price first close above this purple, right? Closes above the purple. Now it's retracing up. Okay, nice bullish engulfing right up into these three, but boom, right bearish, now exit right back out. Not count as a trade. This pink line is our daily entry. I mean our daily entry. So price is levitating right in this range. Continue the accumulation. Looks like we have a bearish break of the low. Might be the manipulation move right between the continuation. Three phases: accumulation, manipulation, distribution. Accumulation, manipulation. What's gonna happen next? The distribution. We have our yellow zone. I mean our yellow cross right above our 618. This is our last and second verified zone. Once we get up here to our 50%, right at our aqua, our 50 EMA lining up, 50 EMA lining up at the 50% fib. Not a coincidence. What are we waiting for? Waiting for a closing candle breaking of that zone. Boom. We can consider that an entry. Could set a buy limit. We don't like the market execute. You could even set a buy stop here. Is really how you like to do it. I like to have a lower time frame verification, but we go into that later, and it's called the yellow brick road, right? When you get the yellow brick road, that's when you know in a lower time frame, when it's double confirmed, you got all confirmations, it's none but profits. The yellow brick road straight to the profit zone. But while we here, right, we just got that final break at that 382, coming into this 236. This yellow zone is here for a reason, because this is like our main either pivot or entry or some type of identify move is going to happen here. So we can see that price is not strong enough. So what is it doing? It's getting rejected back down, testing this aqua, testing the strength. If you're looking at it, this is how price is testing this shift. You see how it's now turning red from this yellow right in here. Remember, candlesticks is just a visual representation of where price is showing you, and the EMAs are just a lagging visual representation of where price is. So I'm gonna pause price and kind of explain that a little bit better. Right, if I hide everything off the chart, and I just have my candlesticks, where price is right now, that's not where price is. Price is actually above where price started, because there's a distance between even where you can really truly get in and where price really is. So what I like to do is I like to have on my indicators to tell me where price is. So these red zones, all these colors are just showing me where they are. And remember, I told you this aqua is the 50 EMA, the strongest in my opinion, with the 100 EMA, 100 EMA being the strongest in comparison with the 50, because that is where the strongest moves come from. So when I draw these zones to show you where price comes back in and fills back in, that's really where price is pushing back into. So that's the whole point of me having these EMAs and these candles on, so you can see. So as we move along, Let's all quit talking and let's get back into the setup. Right now into that purple zone, crossed, shifted here, testing this aqua, testing that 618. We can see it's testing at 48,271 a lot. Boom, rejected back into the 786. Now that's good. When you see price backing in this purple, that 786 is pretty much confirming. It has to come back and confirm before it can go back and sell. Right? These double touches and this move right here is what you really liked. This is what confirmed really the buy and what was really about to happen. So now we have on territory where I haven't marked up yet. We can see we have a nice blue cross here. Engulfed right there. Yep, nice. Anticipating the next one. Anticipating the next one. Doesn't look like we're gonna get it right there. We'll go ahead and get this ready though. Go ahead and duplicate this next zone. See, price is shifting back down. And every time it comes back and tests this aqua, it's okay. As long as it doesn't initially break the low, that's all it's doing. It's just confirming. And as you mark yourself through and walk yourself through these charts, it's easier when you number yourself and count how many times you've been through. So I actually have a strategy and count the numbers, but we're not gonna go through that right now. I'm kind of just trying to like get like a visual representation of how I like to see the market. Came down and hit that negative 13 extension. Didn't close below it. This is a manipulation move. These are what we call the manipulated moves. That paint a picture. Ain't gotta be that big. Notice what happens out afterwards. Shift above the aqua, comes back, test below the aqua. Entry zone now turn yellow, getting some strength, engulfing above the aqua. Oh, rejected back down. Is it a test or is it gonna continue? Is it a test or rejection? It's a rejection, engulfing back down. Notice how I cross below the daily. That pink line is the daily line. Up is reaching back, but we're going lower. Definitely going lower. Once we get some closures beneath the lower time frame, I mean the daily time frame is going lower. But these wicks are also telling the story. It's telling you that it's not done. It doesn't want to let go. Until it lets go, boom, it let go. Okay, let's see how long it stays. Because the distance between how long it stays makes a difference. And how long does it go? Where does it go? Does it break the next low? Does it break the next low? It's struggling. It's struggling to break. It's already pulling back. Is this strong enough? Look, nah, nope. Right back into the daily. That's how you have to be able to see. That's how you have to be in the market when price is moving. Are these real moves or are they just accumulating range of moves? Excuse me. Look how strong price is. That's what we want to see. Back into the top side. Look, let me pause. Price, look. That was a great example of what price really does. Price will hurry up and move without you, rather if you're ready or not. Rather if you're watching, you paying attention, it doesn't matter. Price is on its own time. And that's what we need, because it's going to be what? Right on time. Every time. Yes, sir. Bless us. So as we get this nice bullish rally continuation. Hold on one second. Yay. Okay. I'll run it. I also want to kind of put some emphasis right here. You see where we are at this gray line. It may not be noticeable. We're right where the red zone ends. This is an important time in price because that's really going to be the entry of the next breakout low. But it's also going to be the strongest rejection zone because it's right there, right where the sellers, they got one last chance. That's their last chance. After that is over. So, you know what I'm saying? They're struggling right here. That's definitely identified smaller zone in here. Coming off the previous non-coincidental 786, 886. There's previous up here. You know what I'm saying? Price has to break that. It came and tapped that, coming back into looking like a rewind around 38, 58% here. Yep, taking off. Boom. Gone. That's what we want to see. So as it broke above that 618, that's one of our verified levels. So we can very nicely taking that as an entry level right here. Last thing what we were waiting on, trying to take it up straight into our target zone, right into that yellow brick. Whoa. And what's cool is you can keep these zones afterwards because they'll continue to do other things as well. Let's see how high it goes. Let's see how it plays actually. Let's play it out. Like it just playing and me just kind of explaining what happens as it plays. Oh, not where we are right here in price. I'm so silly, I'd be forgetting. So that's actually where we are right now in price. Well, that was a nice like explanation. Hopefully I kind of messed up here at the end. That was our last verify entry. Here's our first. Here's our last confirmation entry. Here's our first confirmation entry. Right at that aqua. Look how everything lines up. And this is that sweet money. It's that sweet money down here. You mean I know about that sweet money. That good money pocket with the aqua too. I don't know. I used to not like the aqua because I couldn't see it, but it's grown on me, even though I still can't see it. But yeah, that price is definitely going up the target in my opinion. Now let's just kind of cut this short. See how this video goes. Thank you. Love and peace. Pips, pips, pips.